All right, let's dive into a single, absolutely wild 24-hour period in crypto. We're talking record-shattering highs, a massive crash that happened in just 60 minutes, and behind the scenes, the quiet, steady moves of Wall Street's biggest players. So let's try to make some sense of all the chaos and conviction.
So what happens when pure, unstoppable hype collides with the brutal reality of the market? Well, you get a day just like this one. On one hand, you had insane, record-breaking optimism, and on the other, a gut-punch reminder of just how volatile crypto can be. It was a total tug-of-war playing out in real time.
It all kicked off with this. Bitcoin didn't just nudge past its old records, it absolutely shattered them, rocketing up to a mind-boggling new all-time high of $126,000. That headline alone just set the entire tone for the day, and it showed that the market momentum was hitting a boiling point.
And that price surge, it wasn't just random. It was fueled by an incredible amount of cash. Those brand new spot Bitcoin ETFs saw over $7.5 billion in trading in just one day. Now, to be crystal clear, this isn't just a bunch of us buying crypto on our phones. This is serious institutional money flooding into the market. But right in the middle of all the celebration, a massive wave of selling just slammed the market. In just 1 hour, 60 minutes, $160 million in value just vanished. Poof. This is the other side of the crypto coin, right? The brutal, unforgiving volatility that defines the space. So even with that sudden, scary drop, the overwhelming vibe of the day was pure bullishness. So let's dig into the good news, the stuff that had the bulls charging ahead and pushing the market to those incredible new highs. You know, the excitement wasn't just a Bitcoin story. Not at all. This was a rally across the entire market. It really felt like a rising tide was lifting all boats, which signals a really broad confidence that goes way beyond just one single asset. And right in the middle of it all, we saw a huge shakeup in the crypto top charts. Binance's coin, BNB, actually flipped XRP to become the #3 largest crypto by market value. And in the process, it hit its own new all-time high of $1,300. A pretty big deal. And if that wasn't enough, you had this statement pouring gasoline on the fire. It came from the billionaire investor Paul Tudor Jones. Look, when a Wall Street legend like that calls Bitcoin digital gold, it just powerfully backs up the whole idea that this is a legit store of value, not just some wild speculative bet. Okay, so that's the bull case. It's pretty exciting. But behind those price charts and the billion-dollar headlines, there's a much harsher story. Let's talk about the traders who were on the losing end of all that volatility. Let's go back to that number again, $160 million. It's so easy for that to just become a statistic, but that represents thousands of traders. Many of them likely lost everything they had in just a few minutes. You know, this isn't a game. For every single person celebrating a new high, there's someone else dealing with a truly devastating loss. So what does liquidated actually mean here? Well, to put it simply, these were traders using borrowed money to bet that prices would just keep going up and up. When the price took that sudden, sharp nosedive, their positions were automatically sold off to cover their debts, which completely wiped them out. It's the high-risk, high-reward nature of crypto trading at its absolute rawest. But beyond all the chaotic daily price swings, a much slower and honestly a much more important story was playing out. If you ignored the noise, you could see the very structure of the financial world was quietly starting to shift. I mean, just look at the names getting involved. BNY Mellon, the biggest custodian bank on the planet, is getting into tokenized assets. The S&P is launching its own crypto index. And get this, the owner of the New York Stock Exchange led a massive $2 billion investment into a crypto firm. This is Wall Street finally taking crypto very, very seriously. And it's not just the private sector, right? We're seeing governments and regulators starting to get involved in a much more serious way. A sitting U.S. senator actually suggested the country should have a strategic Bitcoin reserve. At the same time, the SEC is working on rules to actually help crypto companies innovate. This is the slow march toward legitimacy. And just for a little context, on the exact same day all of this was happening in the crypto world, what was the CEO of the world's biggest bank talking about? A government shutdown. It's a perfect snapshot of two totally different universes. One is focused on the old system, and the other is busy building the new one. So you have these two powerful and kind of opposing forces happening at once. On one side, you've got this super fast, chaotic world of daily trading.
And on the other, you have the slow, methodical, and you could argue unstoppable integration of crypto into the mainstream. So how are we supposed to make sense of it all?
Ultimately, it feels like there are two different stories being told at the same time. The daily market, that's all about speed, it's about risk, it's about the headlines. It's exciting, but it's also really dangerous. The institutional shift, though, that's slow, it's structural, it's foundational. It's less about today's price and way more about where finance is actually going over the next 10 years.
Which leaves us with the big question, right? Is all this daily volatility just noise that's distracting us from a genuine financial revolution happening right under our noses? Or is all this new institutional money just fuel for an even bigger bubble that's waiting to pop? The answer isn't clear at all, but one thing is for sure, the world of finance is being rewritten, one chaotic day at a time.